are talking about one of my favorite subjects to talk about. How do we plan financially for the slow seasons? So if you are listening to this podcast in the future, coronavirus might be a thing of the past, but right now it's something that is very much in our minds. For example, there was a ton of airline employees that just got laid off, like thousands. And this is approximately 6 months into the coronavirus. So we saw the first round of people being affected, but it's still happening. And it's even more important in your small business. So much more important. So we're going to talk about a little bit about the methodologies that I follow, the bank accounts I use, the percentages I use, some good habits and consistency that I developed over the years, and the bill paying rhythm that I use as well. So let's dive right in. Okay, so the first resource that I recommend, a book that I love, and I really recommend the audiobook because this guy is incredible. His name is Mike Michalowicz, and he is the author of Profit First. The audiobook is so awesome because there's so many anecdotal stories. He goes off on tangents. He's very much squirrel, which is kind of my personality as well. So I feel like we mesh really well together. But in this book, he talks about the system Profit First that he created when he made some bad choices in his business. He was not financially prepared, and it really kicked him in the booty. So it's an awesome resource to check out. Definitely read the book. I follow it a little bit differently. I've added some more accounts than the 5 bank accounts that he recommends. So here's the ones that I use. So we're going to dive into personal bank accounts, and then we're going to dive into business. So 2 separate things. So personal, now check out my free resource on this because it's probably going to be a lot if you're listening. And like all my podcasts, I want to make them short and sweet so you can get out and do these actionable items. So for personal, you've got payable and receivable. So payable account, that's obviously the account that you pay bills out of. The receivable account is the account that you receive all your money. So any paychecks, any 1099 work, any income that's coming into you goes into that receivable account. Then we have a tax account, obviously, because we have to pay taxes. That's how this whole system works. So this account doesn't necessarily have to be for religious reasons. I feel like a lot of times people think of tithing as giving money to their church or organization that they belong to. But what we use it for is if we'd like to give money to someone who suddenly becomes ill with cancer, we'd like to pay their electricity bill, we would like to give it to a charity that we follow. There's so many different things that tithing means versus just giving money to your local church. So keep that in mind when you hear the word tithing. Now, we also have retirement accounts. So we want to be sure that we're maxing out our retirement accounts as much as possible because we know about compounding interest. We believe in that. That's a whole nother rabbit hole we could go down. So if that's something that you're interested in, we can definitely talk more about that. But we also have an allowance account. So that isn't a specific amount of money that both Joe and I have. And so it's just money. It's basically like our version of Dave Ramsey's blow money. You know, you don't need to talk about what you're going to spend it on. You just go blow your money. So we call that an allowance account. We also have an emergency account because let's be real. Stuff happens. The washing machine breaks, the hot water tank goes out, and can we just be honest in the fact that I swear that the appliances talk to each other? One of them's like, I'm getting kind of sick and tired. I think I'm on my way out. And then the refrigerator's like, yeah, me too. Thanks for reminding me. I think I'm kind of sick and tired and I want to be done here too. So I feel like they talk to each other, and when stuff starts going, it starts going. So that emergency fund is there for anything that pops up that we weren't aware of. Now, our savings account, that's another important one. So that's just money that we have tucked aside for savings if anything were to come up. For example, broken limbs. I know that could also be considered an emergency, but we have that money set aside in our savings to satisfy our health insurance deductibles. Any other thing that we're saving for, like if we're saving for a new house or a new car, things like that, that's what you could use for your savings as well. Okay, that was a really quick and dirty on the 7 personal accounts we have. Now let's jump into business. So you have the same, you're going to have the receivable and the payable. Those are a given. You're going to have that with any business, any personal accounts, anything. Then you're going to have your taxes because obviously, again, pay taxes. Then you're going to have your profit account, and you're going to have a vault account. So profit account is percentages that you are taking every month from your business and you are socking that away. Because have you ever had the experience where you filed your tax returns and they say, yeah, you made all this money this year. And you're like, oh my gosh, that's awesome. Where did it go? Do you ever get your W-2 at the end of the year and you're like, dang, I spent all that money this year. Where the heck did all that money go? So the profit account helps you to actually be able to take a quarterly distribution, but every time you're putting money into the receivable account, you're also transferring it into your profit account. It's awesome. So that way, when you actually get to take a quarterly distribution, there's real money there. It's amazing. Okay, now your vault account. So this is an account that I use specifically for my E&O insurance. So basically that's an insurance policy that if I make a mistake in the financial services business that I have, that money is set aside to take care of that. Now, the insurance policy won't allow me to pay on a monthly basis. I have to pay annually. Well, it's a significant chunk of money. And every September, even though I know it's coming, if I don't plan ahead for it, I'm scrambling at the last minute to say, oh my gosh, where am I going to get all this money from to pay this policy? So I just enacted a vault account that every month money gets transferred to. And here's the key. I set it up automatically. Now, I bank with US Bank, but I'm sure almost every bank does this, where you can set up an automatic transfer in between your accounts. And this is a game changer because it happens without me having to do it. It happens without me knowing that it's going to happen. It just does it. And then all of a sudden, I look down in August, I'm like, dang, okay, I'm good to go. I got enough money to pay for this huge expense that's coming up. And it's because I set it up last year. Okay, and then for the business, we also have investment accounts and savings accounts. So we want to get to a point someday where we're going to be investing money that our business is producing, as well as having a savings account. So if something comes up and we want to pay for it, like, for example, an awesome course that we're like, oh, it's $2,000. I'd really love to get it. I definitely don't want to put it on a credit card though, but I have money in my savings that I could use for it. So that's essentially what the savings is. Now, percentage-wise, this one's going to be a tough one because you may or may not start out with all these accounts, and it's a lot. I know it's a lot. And people are going to look at you like you're a weirdo, and that's totally okay. The main thing that you want to find out is, does my bank charge me fees? If it's a yes, either negotiate it away or find a different bank. And when you go in there, be fully mentally prepared that they're going to be like, say what? You want to open how many accounts for your business and your personal? That's just weird. It's okay to be weird. You want to do these things. It's going to make your life so much easier. So when you're looking at your percentages, my best recommendation is, if you're starting out, is you want to start small, like 1%, 3%. Don't go whole hog and jump in and do 25%, because you know what's going to happen? You're not going to be able to sustain it. And you want to know how I know that? Because that's the mistake I made, of course. I was like, I got this. I got it. No worries. I got loads of money. I'm really good at budgeting. But here's the thing. When you start moving money out of accounts and you pull up your bank account and you're like, holy smokes, where did all my money go? That's what happens. So start small. I think in Mike's book, he recommends starting out with 1%, which is good because remember, you're always going to be building on top of it. So your action of the day is to figure out which accounts you have, figure out which ones you need to add to it, and make that step today. Find a bank, go open some bank accounts. And you know, with everything going on with the coronavirus, a lot of banks have loosened up their requirements. And so you can just do it all online. So carve out some time, set up some extra bank accounts that you have or don't have. Make sure that you get them all settled up, all put together. And it is going to be a game changer for you.